A lot of you guys yesterday were asking with the hurricane how close I was. So there's the beach right here, and we'll be in my office. Give you guys kind of a quick rundown right here. So there's how close I am, and there's where the office is. So I'm sitting right here, probably about, I don't know, 100 feet to the beach. So yeah, if you get a tropical storm or a hurricane, could be devastating. So looking at the precious metals here overnight, and again, it's Thursday, August 31st, about 6 a.m. Central Time. So precious metals overnight, they're softer after yesterday's kind of mixed session. You got gold down $2, 1971. Copper down 3 at 380. Silver a bit weaker here. Down about 18 cents. We're at 24.91, dropping back below that 25 level. You got platinum unchanged here at 983. So usually what I do on the last day of the month is I'll look at what was the month-to-date performance. So you got platinum up 2.7%. You got silver down 1.5%. You got gold down 1.88%. Copper down 6%. So you look at July, how it closed, and they marked it up. They marked their books up into the end of July. All the precious metals, they skyrocketed into the close. August 1st, all the CTAs were caught off guard. They liquidated all that, and then really we started off on this softer footing throughout the month. We had a lot of economic data come out that was quite inflationary. Jerome Powell was extremely hawkish, and that's why we kind of sold off throughout the month. This miss on recent economic data is what caused the market to shoot back up. And if you look at a lot of these markets, they're really trapped in trading ranges. Like silver, 22, 23, 25, 26 on the upside. No real catalyst for like a sustained breakout. You can if you sit there and you stare at it long enough, yeah, maybe you come up with analysis paralysis. You start looking at eligible, receivable inventories with the CME. You start looking at auto demand. You can make a case for just about anything. And I think that's what's going on a lot in the internet here in the precious metal space. So, but I really believe in data-driven process as far as coming up with what you're doing in the precious metals market. So we got core PCA coming out. It's expected at 0.2%. You got initial claims expected at 236,000. Personal income and personal spending. If you see the claims number go up, that means the Fed is going to be less hawkish. They are going to have to address a weaker employment situation. They'll stop raising rates. The dollar will come down. Gold will naturally go up. Silver will probably play catch up. This is just very basic analysis. You look at the gold market or the silver market, you look at industrial demand, 54% of it's industrial demand. You look at China, they're one of the largest industrial consuming countries. They need to provide stimulus. So these are just some of the things, the easy checklist for knowing if you are in the right asset class. You look at crude oil. Crude oil has been a great contract. And the reason is OPEC needs to balance its budget. Where did they do that? In the 80s. The price was in the low 70s, high 60s. They have to get it up there to balance the budget. They control the supply. They cut production to get it up there. I mean, commodities are very simple. Don't overanalyze things. Now, getting into a couple other things here. The current trend on gold, neutral, 2 levels to watch, 1986. We close above there, it's going to break out to bullish trend. All the trend following system traders are going to go long if it closes above 1986. If we break below 1933, they're going to shift and they're going to go short on the market. So they're neutral right now, play the trading range, have an upward bias on the market, but use some calculated risk or call spreads or things like that. On a silver market, it is bullish right now. However, it was a flat session the next day, and it's a weaker session today. Clear red flag on that bullish momentum. It just lacks the upside, and I think it's because people look at it's in this trading range right now, 22, 23 on the downside, 25, 26 on the upside. So they're taking some off. It's just natural. 2409 is going to be the key level, the 200-day moving average, and then if you look at outside markets, they're mixed right now. You got the equities, they're flat. You've got the dollar index up 36, 103.45. That's been really resilient. And then also treasury yields are flat at 4.10%. So you guys have any questions a little bit longer? I know a lot of people had concern, how close am I to the beach and stuff like that. This is the Blue Line South office. I do also have an office in Chicago at the Board of Trade. I work out of both these locations here. So winter's a little bit better down here. So you guys got any questions? Give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck and good trading.